In this video, guys, we're going to look at breakouts from a Keltner channel. Stay tuned. Hey traders, warm welcome to you. Right, so Keltner channels generally are considered a kind of mean reversion tool, right? Like a Bollinger Band, slightly different, it's based on an ATR. But generally speaking, the idea is with the Keltner channel, we're kind of looking for something. If I bring up, let's say, gold or something like that, let's have a look on here. You know, we're kind of, if something's in a range, so the range bound condition like this here, your idea is that you sell the upper band, you buy the lower band. Another example would be, let's say Tesla. I know that's been in a kind of range for the past however long. Look, you know, you sell the upper band, you buy the lower band, give or take, that's generally kind of what they're overall designed for. But there is another way to use them, which is actually quite interesting. And I was kind of looking at these in relation to around earnings, like trade stocks around or after earnings specifically, or even stuff that's had a catalyst, whether that is a currency pair or commodity. And I noticed that actually quite often a breakout of a band doesn't necessarily mean it's a specific signal, but it's a good filter to say, you know what, if we get a breakout of a band, then there could well be a multi-day move happening here. Because of the very nature of the fact that you're breaking out of the true range, it's an unusual move. Generally speaking, you would assume that actually it means there's more cash flowing in or out, so there's more participants than normal because you're getting that extreme move. And the good thing about the Keltners is that they stay at the fixed width as they go in terms of ATR, rather than the standard deviation bands of Bollingers, which kind of widen out. Now it's not fixed width per se, but because they're a true range, average true range, but they don't kind of stretch out straight away as Bollinger Bands do, as you'll know if you've traded Bollinger Bands. So let's have a look. So example could be stuff that we know has news coming out, or we know is volatile. So it's either something that's really news driven, and that could be maybe cannabis stocks, which are very news driven, something related to blockchain, something related to pharmaceuticals, if there's some sort of news thing going on, airline stocks. You get the point. It doesn't necessarily mean something that's now when you're watching this, but just generally speaking. Or it could be after earnings. So this example here, you can see on the screen now, US Steel, right? Earnings came out and we went from lower segment, if you like, so in other words, the lower portion of the band, straight away ripping right to the upside. Now, I know that potentially there's other news around this, but regardless, what we're looking at is extreme moves out of the band to say, okay, this could be a breakout trade or a trend trade. I want to follow this momentum. Now, of course, you've got to manage your risk. You've got to have some kind of strategy in place to manage your risk and to get on the thing. I'm not necessarily saying chase it, or maybe you do with a small position and look to add. You know, we're not going to go into kind of full depth here, but what I wanted to point out is that they can be very good at highlighting significant moves. Another one that I've been watching for a while, JD Sports, which was doing very well. It's a UK share. They do kind of sportswear in the UK and internationally as well. They came out with earnings. They come up quite a lot, and they immediately didn't gap, but they immediately went from kind of most of the year to trading in the upper band to now trading straight away and broke out of the lower Bollinger Band. Now, yes, there was a pullback here. Yes, it was a 4 or 5 day pullback, but ultimately it was the start of a significant down move. And so you've kind of got to pay attention when something has, especially with the catalyst. I think this is the point, guys. It's not just any normal trading. When there's been a catalyst and the market moves significantly out of the band based on the catalyst, it's time to pay attention. So that's one of them there. Another one, I recognize again that this is some kind of, there's other news, but this is a sort of precursor. Facebook gapped, it was sitting really in the upper kind of channel, gapped down. This one gapped actually out rather than a multi-day move. This one gapped out, specifically gapped out. And that was the actual precursor again for a multi-month move even lower. So, you know, we kind of have to look at this and think, well, do you know what? This could be implemented into part of a strategy. Same with kind of Amazon. There doesn't seem to be there was a catalyst as such, and maybe go, well, it wasn't really count because it wasn't really a catalyst, and maybe it's a bit choppy, but of course you're not going to make money all the time on them. But if we look at a currency pair like a USD JPY, for example, okay, wasn't necessarily news that did this, but we broke out of this kind of long-term down channel. I use this example quite often because it's such a nice technical pattern, and these things do occur quite frequently. We had this down channel, we broke out of it. Yes, there was something here, and I lost track of actually, well, it kind of doesn't cross my mind as to what it was, but I know we had some news coming out on this. But the point is, look, you know, we're sitting there chugging around, then we break out of the Keltner after this, whatever news this was, and you can see there was something because there's a volume flow here. We had a big spike, a big daily range, all the catalysts that you need, something, like I say, it escapes my mind, whatever it was at the time, I should remember it, but we then went and we were closing above the Keltner channel after trading in a different environment. So this then became a precursor for multi-day move above the Keltner channel, multi-day closes above the Keltner channel. So what can we do with this? We can either say to ourselves, all right, catalyst, extreme move, extreme volume. Yes, we get that. Do we get a now movement and close above the Keltner channel? Yes, we do. Okay, how do we trade that? Now, you can either put in your existing strategies, or you can say something like, well, you know what? I'll have a nibble in the direction of the trend. Small, I'm chasing a bit, but ultimately it's probably going to be back in after a trend because that's the change of direction. And I'll look for multiple closes above. And the first kind of close I get that's below the lower channel, so in other words, the lower segment below the moving average, I'll exit the trade, regardless of whether that's in my favor or against it. I think that gives you some room. It allows for the fact that you may well be chasing, but what it does is it kind of keeps you in line. If you get stopped out, then maybe you can look at it again with a broader perspective. But what I wanted just to mention in this video, guys, is that, you know, don't just kind of restrict indicators to one thing. Just scanning through and kind of finding another way of filtering out, for me, kind of helping me filter stuff that's after earnings, that's after catalyst, that's after news, in a way that brings it to my attention. This is not a bad way of doing it. Say, okay, well, actually we've closed above a Keltner, so my rule would be, okay, a catalyst, this and this, and a close above a Keltner or below a Keltner, bring it to my attention, put it in a watch list, let me then look at it manually. You know, I don't know specifically if there's an ultimate kind of strategy yet per se that you can go, well, I must do this and this, but I do think it's not a bad way of highlighting things to you, specifically if it's after an earnings or after it's after data, if we're talking about economic data for a currency pair or an index or a commodity, maybe it's volume data, maybe it's a commitment of trades or something, some kind of pinpoint. I think that's the key here. It's not using it every single scenario. It's okay, there's something happened that's encouraged extra traders in. They've caused it to do something unusual. Bring it to my attention. There's an opportunity. All right, guys, have a think on that and let me know your thoughts in the comment section below on that. Keltner channels, using them, the breakout of the Keltner channel as some kind of filter and alert for your trades. Take care, whatever you're doing. Bye-bye.